A lot of people look at you and they're like, man, there's just no way I'm ever going to get there, right? I've got this 100-unit portfolio, or I've got this, 1,000-unit portfolio, and you're sitting at 7,000. So, I mean, it's that simple, right? You do the deal, you sell it, you take your cash flow, you do a bigger deal, you do a bigger deal, and you just keep going. And there's no difference in a $50 million deal and a $5 million deal, right?
Well, there is some differences though. They're easier to do.
Right. But
and they're easier to do. Like, this is the mistake I made in the beginning. I should have done that first batch of deals and shifted.
Mm-hmm.
And I don't know how to stress this to people enough. I know it's hard to think about. I used to do 300 person events in our conferences. Doing an event with 3,000 people is easier than 300. And buying 500 units at one time is easier than buying 50. You get better debt, better leverage, fewer people looking at the deals. The bigger the deal, the fewer people you have to compete with. And now the only issue now is the cash down.
Yeah.
So if you can get over the cash down and start asking yourself good questions like, what could I do to come up with the cash down? See, people are buying real estate based on how much money they can have or how much money they can raise. And rather than doing that, that takes your attention off the best stuff. The question should be, how could I buy the best stuff? And then do what you need to do to buy the best stuff. So I figured out how to quit taking shortcuts years ago and said, hey, how could I buy the best assets? Why is that important? Because I want to buy something I know I can sell. And if I'm buying something that Blackstone is bidding on today, Blackstone becomes a buyer for me when I'm ready to exit.
Right.
If I'm buying something that a dentist is competing with me on, then I'm probably going to have to sell to a dentist. And that's not who you'd want to sell to today. Blackstone has enough money to do a deal right now. 1 month into this COVID thing, they have enough money to buy a deal right now for cash. The dentist isn't going to buy a deal right now. A dentist will not get a loan. Nobody's going to get a loan right now. Blackstone won't need one. So the point, what I'm telling people is what I've learned. I've learned so much over the years. Like, I should have bought more. I should have bought bigger units. I should have bought nicer units. I should have bought lower cap rates, not higher cap rates. Like, I'm just sharing the mistakes.
Yeah.
I should have not sold anything, really, and I should have raised money sooner, because I'm helping a lot of people. I'm doing for other people what other people will never ever do.
Yeah.
Like through the last 3 weeks, we've contacted 7,721 tenants. My investors don't make those calls. I've contacted every lender. I'm on a call with a lender every week. Hey, let me tell you where we're at. Let me tell you what's going on. These are our offers. We're in good shape. We won't let anything go. The other thing is, if you're really committed to real estate, you do not want to let stuff go in these cycles. When it gets scary, you want to be in communication with the lender. You don't want to ask for forbearance right now. You want to tell the lender, I'll get through this.
Yeah.
And because on the other side of 2020, I'll promise you should interview me a year from now, like today, as of today, March, whatever, April, whatever it is. The apartments I'm buying today that everybody's like, oh, Grant Cardone's going to go bankrupt and he's going to lose everything and he's over leveraged. We're 60%. Our lowest leverage is like 55% in some deals, 60% across maybe a third of them, and no more than 75% on anything.